Hey, Forex Fortune Hunters, Tom Wilmot. Let's find some pips. I want to share with you and review and reinforce this notion of the buy zone and the sell zone. This is just at random a chart, Euro JPY 5 minutes. You could pick any one. It's like doing a magic trick. I can find a card, any card. Pick a card, any card rather. This particular one has a vertical line through it. This is the beginning of the New York Stock Exchange session at 9:30 on 14 September, which is a Monday. And I would just like to share with you how we go about identifying the three events that create one of these zones. First of all, this is our chandelier. A chandelier does support and resistance. It indicates support and resistance. As you can see, when the price broke through this 5-minute chandelier to the north, we had a white line appear at the bottom that indicated support. Just as quickly, this failed and came down, and we had the euro falling again against the yen this morning. This was about, I don't know, 8:30 in the morning, perhaps East Coast time. In any event, the second indicator is the medallion indicator that we use in the room, and that simply notes when the 12 EMA, this dashed yellow line, crosses up over the blue EMA, and it did so here, if only briefly. Okay, so now what happens is when it reverses and goes the other direction, and the 12 EMA falls below the 24 EMA, sure enough, here we have our blue medallion, which indicates we're going in the opposite direction. And the third indicator that we use is a T3 Tilson. That's this particular indicator right here. And actually, I'm going to make it a little bigger so you can see it more clearly. I might even change it to a lighter coral so you can see it on your chart. It's like pink, we don't want that. Here we go. How about that? That's salmon, we don't want that. Holy smoke, this is causing a lot of unnecessary trouble. Well, we'll just leave it at coral. There's your line. Now, when the blue EMA crosses down through this, we would draw a line. That indicates, this yellow line indicates that we've completed this three-event cycle. We have our down medallion, we have our resistance, our red chandelier to the north, and it means we're probably going down. That's the indication. So everything on this side, until we get this change in the three events, everything on this side suggests that we'd like to wait for a pullback and take a short trade. In other words, that we're going to be betting that the euro is going to decrease in value against the Japanese yen. Now here was our first pullback into the bands. If we just stick with the 5-minute chart, no problem. Here's a second pullback into the bands. Both of those represented pretty good entries. And quite frankly, even if you'd taken this entry on this bearish candlestick, you might have had to take a little heat in the next 20 minutes or so, but you never went back and approached the stop loss level. Now this happens to be the bid line that's on here for now from later in the afternoon, but what we're going to do is we're going to put a line right here that would indicate we wouldn't want anything to go back above this swing high, about the level of the T3 below the chandelier. That would be our stop loss level. And so at this particular moment in time, if we entered here, our stop loss would be back to the dashed line. That's about 16 pips. You can see after we'd taken on this bit of trouble and came down here, we'd be at 39, 40 pips. 40 pips versus the potential for this uptick of, how many did I say it was? 17 or 18. So basically, we're in a 2.5 to 3 to 1 risk to reward ratio with this trade. Now let's take it another step. We're going to go down and drop down as we can. Once we see that buy zone, sell zone, we're going to drop down to a 1-minute chart. And you can notice here that we have some opportunities. We pull back towards the line and then we drop dramatically. We drop dramatically in particular here. We can wait for a 1-minute sell zone, which would be right here, a pullback, and then a drop down. And that's worth about 24 pips just on the 1-minute chart. And if we were to put our, sorry for those alerts, if we were to put our stop loss in place here, it it would be up in this general vicinity, and that's only 5.5 pips on a 1-minute chart in order to get 25, and so that's a 5-to-1 risk to reward ratio. Before we ever, and we didn't even measure to here, until we get to a point where we have challenged the 24 EMA, there's really no reason to worry. Now when we don't roll over here and go down right away, that's an indication that things are beginning to chop. Perhaps the tide, which was going out, is now shifting direction. So I hope that helps with your analysis and your profitability, and I'll see you in the next video. Thank you.